Hey all, good morning and welcome to ShareTreck. This is Raj here, and today is the 30th of June 2020. It's an options expiry day. I think the markets are looking really bearish. Most of the publications are also saying the same thing. So let's get started with our daily update. Let's start off with the headline from my TradingView platform. It says US market open, risk-off experienced across most markets on the final day of the month, quarter and half year. So this is going to be a really momentous day today for us. The key points out here are that risk-off experienced across most of the markets on the final day of the month, quarter and half year. European bourses are lower across the board. US equity share futures succumb to the downside with Nasdaq underperforming. In FX, DXY extends above 105. Yen regroups as yields drop. Euro USD inches lower towards 1.04. So DXY is basically the US dollar index that we talk about. It's gone above, which means it's bearish for the stocks. Debt in demand on safe haven grounds rather than duration, as curves steepen on less hawkish or more dovish market pricing. WTI and Brent front month futures are resilient to the broader risk downturn and firmer dollar as OPEC Plus member gear up for today's meeting. Looking ahead, highlights include US PCE and Chicago PMI, JMMC OPEC Plus meetings, speech from ECB's Lagarde. So there is a whole lot of events also up ahead. I have had a sneak peek at what is happening with all the indices. They are looking terrible. Now, if I look at the headline from CNBC, one of the things that caught my attention was everything was going fine between us. Putin says of NATO expansion, Russian forces withdraw from Snake Island. So basically, the talk around the world is that Putin raided Ukraine because NATO expansion was a threat for him, and he felt that Ukraine might join NATO. But what has happened now is we have Sweden and Finland also joining NATO. So it's a negative outcome. It's exactly the opposite of what Putin wanted. And also the Ukrainians are saying that Russian withdrawal from Snake Island is not a goodwill gesture, but they have been driven out, whereas the Russian Ministry of Defense confirmed it as an act of goodwill. So in a war situation, you can't believe either sides because everyone is going to do their own spin. But the fact remains that both parties agree that Snake Island is now devoid of any Russian forces and that Ukrainians are getting it back. So that's the news out here. This could also be taking us a step closer towards resolution of Ukraine-Russian crisis, but nothing is happening today as such. And the next one is, next headline I have for you is stock market. Recession just barely beginning to be priced in, says the strategist, which means there is going to be much more drop ahead for us. 3,200 on S&P. S&P is very attainable, says Matt Malley, equity strategist at Miller Tabak. And those kind of statements are becoming much more common. And here is a statement from Fed Chief Powell. It says, is there a risk we could go too far? Certainly there is a risk. This is with reference to interest rate hikes. The bigger mistake to make, let's put it that way, would be to fail to restore price stability. So what Chief Powell is saying out here is that the most important concern for the Fed is to control inflation and bring down the prices rather than worry about stock market going into a recession or, the economy going into recession or stock market going into a deep drop or anything of that sort. So that's the intention of Fed Chief Powell out there. So with all this said, the outlook for today is pretty bleak in my opinion. Things are looking rather red. And in the meantime, I think we have to go and have a look at Nasdaq and all the other indices, crypto, etc., to see what it looks like. It's around 7:45 a.m. in the morning, and I think this is the right time to get started with our technical analysis of the indices. Let's start with the futures first. Nasdaq futures are looking very weak. They are down minus 1.73%. And as you can see here, we are in a bear channel with this diagonal green line being a support. And how low can Nasdaq futures go? They can go a lot lower. It's just this diagonal green line, which was the strongest resistance for a long time, is going to act as a very strong support for us. And we are up here somewhere around 11,483. Which is at this point, and we can still come all the way down to 10,178. The potential is still there. And if we were to look at our MACD, you can see that the MACD is bullish, but tending towards the signal line, and momentum is below average and pointed down. That doesn't look great for Nasdaq futures, so it's totally bearish. Now let's go and look at the indicators. First, I would like to take a look at oil, and I do believe that oil is going to be bearish going forward, but there's a lot of strength in the price of oil at this point of time, according to the charts, mainly because we have a support out here, which is at 107.52, which is a horizontal support, after which we have a diagonal support with this green line, after which we have a support out here from the 100-day exponential moving average, which is sitting at 105.06. So there is a whole range of support available for oil. And the reason why I feel strongly that oil has to drop is mainly because globally all central banks are increasing their interest rates and trying to squeeze out the funds and liquidity from the market. This leads to demand destruction. When demand destruction happens, demand for goods and services reduces, as a result of which manufacturing will have to come down, unemployment has to increase, and as a result of all of those things, people will be driving less, factories will be consuming less power, and there will be less demand for oil. And therefore, the production capacity being what it is at this point of time, if the demand is going to go down, it's logical for the oil prices to go down. There's a period of adjustment. I think that's what we are in. But in the near term, I think oil prices should continue to go down, and that's going to be good for the inflation part of it as well as for the stocks part of it. Having said that, I want to go and look at put call ratio, and you can see the market is very, very bearish as of yesterday's close. We are at 1.24 out there, and I'm expecting this bearishness will come down by the end of day today, and will go closer to 1 but stay above 1. That's my expectation, because markets always a swing. It's a collective action of millions of buyers and sellers, and therefore when the market moves in a particular direction, it goes on overdrive and then it swings back and it's trying to come to a mean, and in the process you have a lot of up and down movement in the market. So given that we have had a lot of downward movement, that is going to be a little bit of a pushback, and we are going to go the other way and then swing back again. And that's what is meant by volatility, and that's what's shown here in this chart. Now, with that said, let us go and look at VIX. We can see that the VIX has gone up today. This is the candle for today, the 30th of June, 2022. And we have our next resistance at 33.77. So there is a long way for VIX to go up, and it can. And I'm again reiterating my calls that until VIX touches 40, I don't think we are going to see capitulation of the seller and bottoming out of the market. We can see that the momentum is picking up here, and the MACD is almost ready to cross over the signal line. So I think VIX is going to just spurt today, and that's going to take down the market further. With that said, I would like to look at US dollar index. Let us see US dollar index first. US dollar index is also going up, and it has got a resistance out here at 12,956, and it's already touched that and come back down again. So we have this strong bull candle out here, bullish candle out here. It's a bullish hammer, and MACD is bullish and moving away from the signal line. Momentum is also high. It's very close to overbought, so there is still some runway for the US dollar index to go. So my prediction is that it's going to hit 12,956 and then come down again, and still get support from the 9-day exponential moving average, which would have moved further up by that time. So that's negative for the shares. So overall shares are looking negative. And I'm going to go and have a quick look at QQQ, which is our Nasdaq index proxy. It's the ETF. We have a doji candle out here for the 29th. So there was indecision and capped by the 9-day exponential moving average. And today, pre-market, we are down minus 1.60%. So we are not looking good out here. However, fortunately for us, the MACD is bullish, but unfortunately, it's tending towards the signal line. and momentum is below average and flat. So things are not looking great for Nasdaq, at least at this point of time. It seems like we're going to have a bearish open. What happens after that will depend on the settling of all the options and everything, because we are at the option expiry time. So let us see what the market has in store for us. We expect a lot of volatility today, and there will be opportunities to make some quick money, but it's a very high risk market. And if we look at S&P 500, again, we have the same situation. We are down minus 1.40%. There is no point going through all these technicals out here. Let us keep today's video short. Things are looking bad for S&P 500 also. Pre-market itself is indicating a negative. Combined with all other indicators that we have seen, things are looking bleak out here for the overall stock market. Here we are in the crypto market. We are looking at Bitcoin. And as I mentioned yesterday, Bitcoin has definitely fallen below our support level of 20,233. And I think it is heading towards 16,527. There is a tremendous amount of weakness in Bitcoin. And if we look at gold, we can see that gold bounced off this support that we had here, and it has gone up again after coming down all the way here. Gold is also looking pretty weak. And if we zoom out at this point of time, I think we have a support out here. If I make this straight line, this is the support that we have. And we could fall down further in gold before we start moving upwards. So that said, let's go and have a look at our Genomic shares. Well, finally, yesterday I did my first purchase after a very long time. I bought SQZ Technology as 3.05, which was very close to the bottom of the market yesterday, with the hopes that things are going to bounce back today. When we go to SQZ Technologies, I will show you the chart. We have a line of support. I bought very close to the line of support, and today is going to be a critical test of that support. If we go down further, then I'm in a bit of trouble for a short period of time. But if we bounce back after that towards the end of the day or tomorrow morning, then I'd be fine with that. So let us see what happens. And with that said, let's go and have a look at our Genomic shares. So here we are with our Genomic shares, and I have sorted it out so that we have the winners at the top and the losers at the bottom. Let's do it the other way around. Let's have the winners at the top. So Bluebird Bio was the winner yesterday, and it came up on top. IMTX did very well with a gain of 2.34%. Allogene did very well with a gain of 1.74%. If you look at IMTX, it went all the way up to this line of resistance, which was a support earlier, 8.80. Mark it as a resistance, and it came back down again, and it bounced off the support here. So it's we have to see if it's going to be range bound going forward. There is no trades pre-market. Allogene was up 1.78%, 74% as of yesterday. All these are Thursday close numbers, and all these are Wednesday close numbers. We don't have a candle for today because the market is not yet open. It's around 8 o'clock in the morning. We look at Vertex. Vertex was up 4.18, $4.18. That is 1.5%. And we are still within this upward bull channel out here. And the bull channel is continuing away. And we have support from the 9-day exponential moving average as well as 20-day exponential moving average. So we started low yesterday and we went up. And today there is no trades pre-market. We still have plenty of scope in the momentum, as well as our MACD is still bullish, though tending towards the signal line. Let us see if the overall market affects Vertex and it comes down. Intelia was up 0.72%. Again, it's not yet reached the floor that we have set for it. If it comes close to the floor, there would be an opportunity potentially to buy and expect for it to move upwards and then recover some profits. But it's not a done deal because we don't have sufficient sample out here. We need to see like this. We need to see at least a week worth of action before we can do that. And then if we look at Novartis, it was up 0.71% yesterday. With regard to Novartis, I'm planning to clean up this chart out here because there are too many lines. I'll do that after this video is over. But the MACD is bullish and momentum is just below average and pointed upwards. So let us hope that Novartis has got some ability to hold on. It has got a support out here at 84.28. So if it did come down, that's where it's going to bounce off. Pfizer was up 0.55 yesterday. Again, it's supported by the 50-day and the 100-day exponential moving average. It opened low yesterday, it went up, but it was within the range of trading that happened on Wednesday. And if you look at Regeneron, it was up 0.54, IDNA was up 0.38, and Beam was up 0.05. And we have this line of support here for Beam at 40.22, and it's held at 40.42, and there is no trades pre-market, so the support is still holding as of yesterday. We also have the support of the 20-day 9-day exponential moving average and the 20-day exponential moving average. So those are also giving it support. So Beam is likely to hold on, but we need to see whether the overall market can impact it and take it down, because it's got just a gain of 2 cents as of yesterday. So there's a good chance that we might break down below this support level and potentially below the 9-day exponential moving average. CRISPR Therapeutics lost 0.44% yesterday and smartly bounced off this diagonal line of support, as you can see here. So our support is still holding. Pre-market, there is a trade at 60.12, which shows a drop of minus 4.57%. And if we look at 60.12, which it shows that we are below our diagonal line of support. We have fallen below it. So I still have an option of adjusting this bull channel or wait and see what happens. Our next support for CRISPR Therapeutics is going to be this red line that we have here at 59.15, which was performed some kind of a resistance in the past. And after that, we have 53.44 as the next support. So CRISPR Therapeutics is looking a bit weak today. Illumina is down minus 0.53 yesterday, and that's almost exactly $1. And we are below all the exponential moving averages. It doesn't make much sense talking about Illumina because the momentum is absolutely weak. So it's going to take some punishment today. ARCG is down minus 0.62%, and it's come back into our range. It'll be safe to buy ARCG for a short-term trading perspective if it came somewhere close to 29.67, assuming that it's going to bounce between these two lines, line of resistance which is at 33.56 and line of support which is at 29.67. So that's what I'm expecting. This is again not financial advice, just personal opinion. Please do your own due diligence before doing any trades. Verve is down 1% as of yesterday, and it's presently at 15.15 pre-market, having dropped minus 2.26%. So we are firmly between the two channels we had earlier. So I'm going to mark this as a resistance now. And we are going to be range bound between 15.73 and 12.43. So there is a good opportunity to trade between this, both day trade as well as swing trade. If one was prone to taking risks, we have to wait and watch what happens with the market when it opens. I suspect it's going to help the price break below the 9-day exponential moving average, which is the yellow line, and the 20-day exponential moving average, which is the orange line. Depends on the strength of the downturn in the market. Right now, it looks like it's a strong downturn today. The MACD is also tending towards the signal line. Momentum is above average but pointed down. So it's not looking good for Verve. Editas was down minus 1.77%. Again, it's within the range that we had before, the green line here and the red line out here. So we needed to come down further for it to make any sense to buy, but it has got strong support from the 20-day exponential moving average, which has to be broken. Pre-market, it is down minus 4.42%, and that indicates to us that the 20-day exponential moving average has given up, and we have fallen below it. So our next stop is going to be 9.65, which is this diagonal, which is this horizontal green line of support. And that said, we go to Teladoc, which is down minus 2.08, well within our range again. Caribou Biosciences is also down 2.11 as of yesterday. SQZ, as I was mentioning, I bought SQZ at 3.05 and its support is at 3.02. So I bought it very close to there. So I'm putting my money where my mouth is. Let us see what happens to me, and it's going to be fun for all our viewers to watch, because the first time I put money in here after a long time. And I hope it bounces back again. And if it does dip down like it had done here, maybe it goes all the way up to 2.86 and then comes back up again. That's my bet. Right now, the chart is looking very weak. Invita is down minus 3.05%. It's coming very close to the buy range. And if it comes close to 2.15, I would definitely look at buying it. Right now, it's at 2.48, down minus 2.36% in a pre-market trade. And then we go on to DNA. DNA is down 4.21% as of yesterday. and it still got support at 2.12, and pre-market we are down 2%, we are sitting at 2.45. So DNA is also looking weak. PACAB is also looking weak. It's down 2.84% pre-market, and we are coming very, very close to our diagonal line out here, which was sitting at 4.52. And pre-market we are at 4.44. So we already fallen below that. So the next line of support for us is 4.00. And when it comes close to that, I think I would be perfectly happy to buy a little bit of PACV, all with the view of doing a short-term trade and getting out of it as soon as it bounces back, knowing that we are in a bear market and any rallies are going to be brief and short-lived, and the mean is going to revert back to the downward trend. So with that said, I'd like to bring this video to an end. And you might notice that yesterday I put a geopolitics piece because a lot of action is happening in the geopolitics area, which are of great interest to me and potentially to many of our subscribers. So I'm starting a new segment which I may post whenever there's geopolitical development. That's meant to be over and above our genomics. I'm not losing my focus on genomics. We are still laser focused on genomics, but genomics is not standing alone as an island. It's part of Nasdaq, and Nasdaq is sitting in a global financial system, which is definitely impacted by geopolitics. And the geopolitics situation is very volatile at this point of time. And also in the stock market, we are close to a recession. We are actually already in a recession, in my opinion. We wait for the formal declaration. But that being the situation, I thought that a few geopolitics segments are going to be in order. I hope you liked my segment yesterday about Iran and Argentina wanting to be part of the BRICS grouping and what that means for us here in share market and genomics. If you did not have a look at the video, please go and check it out and let me know what you think about it. And also please visit our community section because we have got a lot of polls going on out there, and we're getting some insights from the community. I'm going to show you briefly what we have out there. So here we have our homepage for the channel, and we have the community tab out here. And you can see that our latest poll is out here. We have already got 6 votes. This was issued 2 days ago. And then we have other polls also out here. What do you think is the greatest risk to the stock market? We have around 24 votes here and 29 votes for the previous poll. So it's worthwhile looking into this and participating in it and putting a voice into this so that we have a better idea of what's happening in the market. And I also would like to get some feedback from you. Which segment of daily update can we shorten? This is the question I'm asking, and I've got only 14 votes. We have around 560 odd subscribers. I need more votes here so that I can do better with this channel and make it more interesting and to your liking. And I'm asking your help so that we can improve this channel. So please put your feedback in here so that you can help guide the duration, content, and everything related to the daily updates that we make here. So with that said, I would like to end this video here. If you like this video, please press a like out there. It helps YouTube promote our channel to new viewers. And if you're not yet subscribed, why not? Please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.